And we're live. We're going to be talking about specifically entering like bracketed orders. So things where there's a stop, things where there's a, the things.
Stop.
Let me share.
That's an order.
Oh, God.
You thought that was done in the last one when we talked about stop orders before?
Boundless, the cringiest trading education service there is.
Stop.
Did you just tell me what to do?
I ordered you.
This hurts. All right. Let's talk about stop orders in all seriousness, guys. Here we go. Let's see. Let's say that you want to get long at 43.80 and you want to put a stop at 43.60. How would you do that? Well, right click or two finger click if you have a Mac or however you have it set up on your Mac. I don't judge. I'm a two finger click kind of guy. Two finger.
Stop.
All right. We'll go to buy custom with stop. Put that in. Now we're going to see two orders appear here. So we see here, the green part is obviously our buy section. This is now the ES. This is S&P 500 index futures. We want to, of course, if you're entering an order and you have a stop attached to that order, you want the closing side, the risk management side, to be equal in position size to your entry. Or if and when that stop fills, it will, of course, like if we have, for example, long 10 and we're short 15, or our stop is 15 contracts, when that stop fills, we're going to be net in a short position of 5. At least that's what 15 minus 15 plus 10 equals last time I checked. So here we'll put our entry long to 43.80 and we said 43.60, right? We'll just type that in.
Sounds reasonable enough.
4360. So we have a limit order and a stop order, both set to day. Now, this is something you want to pay attention to. If you're planning to hold this position for an extended period of time, you may want to set the stop to GTC. If your initial limit does not get filled, you will want to make sure that both orders are canceled. If your initial buy limit order here, in this case, gets filled, you don't want to have this set today, because after that day ends, your stop order will get canceled and you will no longer have a stop. This is something to keep in mind. Now, I'm going to send this order just for example's sake. Oh, good God. Okay. Oh, I put a limit.
You don't have enough buying power for that, silly. What are you doing?
I do. Look at this. I have 100 grand right here.
Oh, yeah. 100 grand of fake money.
Futures.
It's always good to try new things in a simulated account.
Maximum quantity, 10. I was doing 10. Maximum quantity of orders is unlimited. All right, let's go back to SPY because that never does these weird things. Futures are weird, man. All right, let's say
right now. So
432. Let's just say we want to get long at 432 with a stop at 430. So we'll go to buy custom right here on the menu with stop. Now that's going to be a buy limit and a stop market. Stop in this case means a stop market order. So a 430 stop and a 432
maybe
limit. Now I put this in, and we will see. Now we have two orders that have just appeared. We have first our buy limit, which means if the market hits 432, we're going to be long, and if it falls to 430, it will effectively execute a stop market order, getting us out of this long position. Now, in this case, what did I just not do?
Set your stop to good till cancel, GTC.
That is correct. We go here and we can see, this is a day stop, which means after 1 day, this stop will just disappear. It'll be gone. So we want to go to GTC, confirm and send that, and now our stop just did something bizarre. 435. Don't do that when you're actually trading live. That will not end well. There.
You ain't kidding. Now, Ross, what if I wanted to put in a buy order, but with my trailing stop instead? Is there a way to modify that?
There is indeed. Now, when I cancel that, you can see it canceled our stop because these orders are attached to each other. There is a way to do that. Let's go to buy custom, and we'll go to stop again. And we'll go to a 432 entry to limit, a 430 stop. And here we're going to change the stop from here from a regular stop to a trailing stop. Now, when I hit this button, it's going to add some additional options to this bar at the bottom. Now, here we can see now it gives us this thing that says mark, and it gives us this thing where we can click that, and it gives us a percentage, plus or minus, or this step thing that no one actually knows what it means. I don't. The percentage.
I use the percentage.
Yes. So the percentage basically means if we set that to 1% and we send this order. No, I already muffed that up. Minus 1%. Gotta make sure it's a negative if you're below. I think. Am I retarded? It's because the market's closed. That's why it's doing this bullshit. All right. We keep doing this late at night, my friends. So what this means, minus 2%, is that this is always going to follow. Once this limit order is filled, this stop order will follow the market as it goes up, not down, only up. And it will remain below by 2% of the highest price it reaches after that order is filled. Now, if we change it to the plus or minus, and we set this to, let's say, 10, what that'll do is the trailing stop will then follow the market by minus 10 points. So let's go to a whiteboard. We'll both draw on this one. Whiteboard. Start a new whiteboard.
Need a new thumbnail.
Yeah.
There we go.
And we will share said whiteboard. All right. So what that means is if we have the market and it's going like this, and then right here, we get a fill. and that is a buy limit. And then we have a trailing stop right here that's set to this distance from our buy limit. TS. Right here. Also, this acronym is commonly stands for Taylor Swift.
This is not a Taylor Swift order.
Yes. Is it? No, it is. That's what it is. It's a for everyone. You can tell people, you say there's a Taylor Swift order. Now, if this goes up, we were filled at here. We have this distance between our buy limit and our trailing stop, and the market has just gone straight up to here. So now we're here. That trailing stop is also going to follow and will be the same distance below. It'll just be chilling right here. And provided that market, let's say it then comes down a bit, but it doesn't hit that level and then continues going up. As it goes up, this is going to effectively mirror the movements of this market, provided it's making all-time highs. It's going to continue following. And then let's say it starts going down again. Now our trailing stop is here. This is our trailing stop. Market goes around a bit, comes very close, goes up some more. Our trailing stop is also going to go up. And then let's say the market then goes back down and hits this stop right here. We would effectively have, this would convert from a trailing stop order into a sell market order right here. So we entered, remember, right here. As the market goes up, our trailing stop goes up with it. Goes up some more. Trailing stop follows it as it goes up. As it keeps breaking new highs, trailing stop's going to follow. Comes down very close, goes up again, and then comes down, hits our trailing stop. This area right here is where we're going to effectively exit this long position for a profit using a stop order. On the other hand, if the market were to, it's moving around, doing this, we get in with a buy limit. That's a great B, isn't it? And a great L. And we have a trailing stop here. And it goes around here. This is the downside trailing stop. Let's say it moves sideways a little bit. Well, now we have this much distance from where we entered to the now high. So our trailing stop will have also gone that same distance and will be here.
Another way to say it would be your trailing stop, whatever percentage or number.
Exactly. It's going to follow by a fixed distance.
Exactly.
So if this market then goes back down from here, then we're going to be exiting this position. It's still going to be a loss because we have this distance between where our trailing stop now is and where we entered long here. So this is still going to be a loss.
But it's not as much of a loss as when you entered the trade. If it had just
less of a loss, the trailing stop has followed, but it's still like the downside of trailing stops. But let's say also like it goes here and then the market does that. Like that will happen sometimes. And versus if you just kept your original stop, just kept it fixed, it would look like that. And you'd still be in, and then you could close with a sell limit order.
Yeah, cancel the trailing stop and put in a sell limit.
Now, you can also move a stop, not a trailing stop, but a normal stop. Once you've gone some way in your favor, you can move a normal stop to your break-even point. So let's say, we're doing this and we get in here with a buy limit and we have a regular stop market in this case right here. And then this thing goes up a lot. We can move manually our stop market to our break-even point. So now, no matter what happens, we're guaranteed not to lose anything. Notwithstanding gaps and all that, of course, but we're guaranteed not to lose anything, provided the market just comes down and hits this area where we got in anyway. And, that would look like basically just, let me just edit this to a regular stop and make it like 430. We're getting in and then our price goes up, we can move our stop up and just say, okay, we want our stop to be higher. We want our stop to be higher. We want our stop to be higher, et cetera, et cetera. We can keep moving our stop up manually. This is going to be discussed in much more detail in our series specifically on risk management. But that's what we call a mechanical trailing stop. And it's very easy to do. The main purpose of this video is, of course, to talk about the platform, not about risk management specifically, but to use the platform in that capacity. So I hope that this was helpful in understanding different stop types. There's also a stop limit. Do you know how that works?
I'd assume it's just a limit order at a certain indicated level when your stock hits it.
That is correct. Exactly. So we can put our stop and a limit price. I don't think that is necessarily an effective way, because as we know, with market orders guarantee a fill but not a price. Limit orders guarantee a price but not a fill. And the whole point of a stop is making sure that you get out. So I don't know that this is necessarily the most useful order type, but like, what was it that you pointed out? That there's what is it here? There's MOC. There's lots of things that are not necessarily useful.
No, MOC, LOC, yeah.
Yeah. ThinkorSwim is all about combining features that are both useful and not so useful. So, anyway, with that said, in the next part, I think we will be moving on to, we're still on the charts tab. We have a bunch more tabs to get to here, as you can see, because this is the most just unbelievably powerful piece of software. Also, there's this button right here. Hit that, you can pull up your order bar. Forgot to mention that. But it is the most unbelievably powerful piece of software. And I've used lots of them. I've tried. There's one that's kind of cringy called Tasty Trade.
I've heard Tasty Trade.
It sucks, actually. It's a pain in the ass.
I haven't used Tasty Trade, but
and then there's Trade Station. That thing is a piece of shit.
Trade Station?
Yeah, that's a piece of shit if I ever saw one.
I've never used Trade Station either. I know that one integrates with some web-based platforms as well, though.
I mean, it does have a lot of technical stuff available within it, but at the same time, it's like your granny's like 89 Cadillac. It just, it's kind of vague.
A little outdated.
Yeah, you could put it that way.
I've never used it, so.
Yeah, it's a lot like they never learned that there was anything. They were stuck, and they never learned that there was something made beyond Windows XP.
Some people are purists and they think Windows XP was the peak of computing. We could have just had Windows XP that just moved a little faster. No one would be.
I can see that.
Today.
Not like if we polished Windows XP, made it look a little more modern. I think that could be great.
Exactly. You know, we don't need this assistant in the bottom left-hand corner. You know, ask Cortana.
I never understood Cortana at all. That was the chicken Halo with big tits, right?
Well, she was a hologram, so whatever you're into, man. But
Pardon me, the hologram with big tits.
hey, being in love with computer softwares is more and more mainstream these days, my man.
Well, I guess you could say that they were silicon.
I'm not sure that you can. I'm not convinced.
Silicon. This is fantastic. Well,
That's an order.
I'm stopping.
It's an order. Stop order.
Thank you all for watching.
Next, Joe.
We're going to see what we're talking about in the next part. You know the thing.